Good afternoon, everyone. This is Charlene with the At Home with Charlene show, live Thursday from 2 to 3 on KHTS 98.1. We have a great show planned today. I have a friend of mine that I have known for many years on, and I also have Melanie as well. So I'd like to introduce them. I have Ben Hale and Melanie Meyer with Thrivent Financial. And I have been really looking forward to having a great show where we're going to talk about finances, beginning, middle, end finances, just an array of things that we're going to discuss today. And I want to say we probably blew into the station today with all the wind and everything that we have going on. But we're going to make this a fun show. We're going to make it an informational show. Lots and lots of things to cover today. And I don't want to take a minute to miss on this because I know we probably have a lot of people tuning in, especially when it comes to the financial side and investments and things that we should be taking advantage of. So I would like to introduce Ben and Melanie.
Hi there. Hello.
Thanks for coming on.
Thank you for inviting us.
So what would you say is probably the most important piece if somebody's looking to think about doing some type of a finance? Because you're going to have different age groups and things like that. What would be one of the first things you would discuss with somebody if they're coming to you for the first time?
Well, basically, it's what are they looking to invest in, or how long do they have until they need the money? So it's called a time horizon. So there's three basic type of time horizons. There's a short-term time horizon, which would be a short-term goal. We usually say that's between 1 and 5 years. So that's if you're saving for a down payment on a house. That's if you're saving for a trip. You're maybe saving to buy a motorhome or a trailer. That would be a short period of time. Then you have a midterm goal, which is usually 5 to 10 years. That's if you're saving for college, maybe saving for that cabin in Big Bear. You're maybe saving for that big family trip to Ireland you've always wanted to take. And we usually say that's a 5 to 10 year goal. And then you have a long-term goal, which is usually 10 plus years, when you're saving for the biggies, the retirement, want to leave money to my grandkids. We call that legacy planning, or everybody's big keyword is retirement. When can I retire? That's usually a long-term goal. So based on your time horizon is kind of how you invest. So if you have a short-term goal, your 1 to 5 year plan, you're probably going to be more conservative. You're going to want to invest in things that are going to be safer because you might need the money sooner. That would be investments that are going to be probably more in bonds, less in stocks, because if you need that money, it needs to be liquid.
What would be a good first start investment? $1,000, $2,000? I mean, what would you say would be a good starting point if somebody was to come to you and say, okay, let's just say on the short term goal, I'm looking to save for a trip or a down payment, and maybe $1,000 or $2,000, or what would they typically come to you with?
That's a good question. I think it depends on the person. Some people might say, I really want to invest some money and I only have $100. It's really kind of what fits into their budget and their goals. So there is investments that have very small deposits, and there's investments that have minimums that could be higher. So I would say it would be based on the person. Melanie, would you have?
Absolutely. I would agree entirely. Many times when people are just starting out, the best way for them to get started is to say, I have $100 every single month, and I'm just going to make this part of my budget, and I'm going to send it in and get it invested on a systematic plan that just happens automatically.
So I could say I have $100 that I want to invest, and every month I want to give you another $100 for you to invest that as well. So you don't have to start with a big amount of money. You could start off small and continually increase it month after month.
Absolutely. And that's how most people start their retirement savings. That would be in a Roth IRA or traditional IRA. A lot of times you got to start small. You got to build it up over time. Now that would be for that long-term goal. Now to the time horizon on that short-term goal, I'm going to save $100 a month because I want to save enough to buy a new mountain bike in 2 years. Still can be $100, right? But it might be invested a little differently.
And I really never thought about something like that. put a couple $100 here and there just to have enough down the road if I want to go on a big trip. I didn't think about that. I always thought about investing for retirement or investing for down the road. I never thought about investing for a quick, vacation or something like that. So maybe that's a great thing to bring up, is that it could be something that you start small and that can grow to where you want to see it go.
Correct. And the one thing you got to pay attention to is what's called liquidity, right? So if Charlene, if you say, I want to buy this mountain bike in 2 years, you need to make sure you're in an investment within 2 years you can cash it in without any type of fees or penalties or taking on too much of an upfront expense to where it doesn't make sense. So that's where the liquidity is in a time frame. Now, if you're saving for retirement, you might say, I got 10 years till that retirement goal. So your investment philosophy might be a little bit different. It might be a little bit more aggressive because you have time to ride out the volatility in the market.
Yeah, and we probably have a majority of people listening to the show that are, in all walks of life as far as what they're thinking about as an investment or what can they do to invest. And I think it's really good for us to let them know that there's options depending on what you're looking at doing. It's your expertise, depending on a person's situation, you can help them grow just on their own personal basis, depending on what they're looking to do.
Sure. So there is different types of options. Melanie, do you want to go over the
Yeah, when you start talking about investing, as Ben was saying, the first key is to figure out what your time frame is based on what that particular goal is. But once you've identified that, then the question ends up being, well, what is the actual investment that I'm going to put money into? And the first one that people always think about is, well, what kind of stock am I going to buy? And many times we're surprised that people don't really understand what buying an individual stock actually means. And owning stocks means that you actually own a portion of a company. And so as that company does better, the value of the stock that you own, because you own a portion of that company, can go up in value. Now the other side happens as well. So if the value of that company is going down, the value of your stock
Or
could do.
for example, you have a company that is in the social media realm and makes a big boo-boo, and people may be invested in that particular social media company, probably saw a huge decline recently, I would assume.
You have a very good example right there.
There's a lot of news about that the last few days.
So, I mean, I can definitely see and it's the same too. Any time there's any negative word in the industry or anything that's spoken that could be any type of conference, we'll see that affect interest rates. And anytime that affects our interest rates, then investments start happening over in the bond side.
Yes.
And when bonds are being sold, more people are investing in the stock market. So we're heavily, directed by that as well on our end,
Yeah.
It affects multiple industries, whether you realize that or
Right.
not.
Yeah, we get news on the same market. When Fed starts making changes, you probably start looking at the interest rates in the mortgage market.
Right.
And we see it in the bond market.
Right, because
Very
you're
similar.
thinking, okay, we need to move these over maybe to stocks, and when the stocks are doing really well, or then you may move some things over here. I mean, I'm sure it's a watch that you're doing on a daily basis too, for your clients and what their investments are. So if you're looking at a midterm goal, 5 to 10 years, and let's just say, in my situation, in the next 5 years, I'll probably have my daughter going off to college and, going in that step. And I mean, what college is anywhere from $40,000 to $60,000, $70,000 a year in some cases. And
Scary.
how do you prepare for something like that? Because you've got quite a few on your crew.
Ben, you want to talk about that one?
How are you doing that, Ben?
I have 5 boys. That's what they're referring to. So my college plan is scholarships. Just kidding. I don't know.
Hey, I told my daughter too, academics. Come on, girl. We need to be a student here.
I'm building football players. I doubt they're all going to be big D1 players, but it's the conversation you have. And realistically, it's I think college planning, my philosophy and a lot of people's philosophy is kind of we're going to do it together. College planning could be a whole nother hour, actually.
Right.
But the basics are paying attention to loans if you need them, what can the school offer you, and what kind of investments did you make on that midterm time frame, right? So if you said I got 5 years, 7 years, there's still tools that you can invest in to save for that goal. Now, if it's a 5-year plan, they're not going to be overly aggressive, because in 5 years, if the market cycles down, you might have a loss in that account. So
Right.
it's going to have to be kind of in the middle safe. We would say more of a moderate kind
Yeah,
of.
can I just explain? A few minutes ago we were talking about individual stocks, and when you own an individual stock, you own a portion of a company. Another way of owning stocks is to own stocks within a mutual fund. So it's a portfolio or a collection of multiple different companies. So you're not just investing in the ownership of one company, you're investing in the ownership of, 50 to 100 to 200 different companies. So if that one company is not doing well, you've got 499 others that are still doing well. It's a smart place to have some investments, just because it gives you quite a bit more diversification within a stock mutual fund than you would have in an individual stock. So to Ben's conversation, possibly mutual funds would be a good place for some of that midterm and certainly long-term planning.
You guys are listening to the At Home with Charlene show on Thursdays from 2 to 3 on KHTS 98.1. And we're talking with Ben and Melanie with Thrivent Financial. We're talking about finance. We're talking about investing. We're talking about short-term, mid-term, long-term goals. It's just so interesting that there's a lot on your side that goes into investing for somebody. And I think that somebody would definitely need to have the trust in their financial advisor. And, just like on the mortgage side, we must be licensed, and, there's a lot of hurdles and things that we need to go to. And that's the same on your side too. There's licensing and there's regulations and there's a lot of things that you have to make sure you're compliant with as well, which means that you want to work with a financial advisor that covers all those bases, because if you're making a big investment, you want to make sure you're trusting in who you're giving your money to.
Correct.
Absolutely. One of the things that we often talk to people about is, let me say it a little differently. One of my goals, and I think Ben's goals when we sit down with individuals, is to really learn what their goals are, what they're trying to accomplish, and then we can make some recommendations that are going to be appropriate for that. One of the early conversations we almost always have with people is a conversation around what we call a financial pyramid. And I'm going to let Ben kind of explain that, because it's a really nice, concise way of explaining people's finances in a visual that is understandable.
So in a pyramid, you usually start with the base, and in a base, you want to make sure certain things are covered. So a few things we want to sit down and talk about somebody just starting their planning would be how's their debt situation, right? Some of the same things you look at on mortgage.
Mm-hmm.
Can they handle the savings or the investment? Do we need to pay down debt first before we can start our investment plan? Do they have an emergency reserve, right? So if they can make their payments, or if they lose a job, they can still make their mortgage payment or make their car payment without getting into trouble. And then you also look at things on the base of the pyramid. That's going to be life insurance, disability insurance. If folks are a little older, they might consider long-term care. These are all things that say if something happens bad, I'm covered. I got emergency reserve.
And life insurance isn't just for if somebody passes, correct?
Correct.
Life insurance can be if you have children. Can't you put money aside where they can cash that out later on? And I mean, there's a lot of other things, because if I think life insurance, because this isn't my field, I think, okay, life insurance, God forbid something happens to me, my debt and everything will get paid off and my family will be able to function. But I think it's a lot more than that too.
Yes, and it's also like any investment plan, the life insurance plan or the insurance plan for any family is complicated. It depends on what that family needs. What are we trying to accomplish? It's all kind of wraps into that same goal. But that plays into that bottom, right? So if you're a millennial, your need for life insurance might be less. but it's usually still a part of your base. You might still have some basic needs that need to be met. If you're in your 50s and you have a large family, your life insurance could be more significant. You might need a different type. You might need a different strategy. So it all kind of plays into that base strategy of, am I protected? So once you have your protection kind of buttoned down, you start going into what's called, kind of moving up the pyramid, you go into the accumulation mode. Okay, so I've checked all the boxes where things are looking pretty safe. Now I need to start saving for my goal, right? Kind of going back to the first conversation.
Yeah, what if somebody says, look, I have a substantial amount of debt. I want to invest a little bit so that I can get this debt paid off, and then I can continue my growth with, setting aside for retirement, things like that. Because, obviously we're in the state of California. We live in a very expensive place to live. I'm sure there's a lot of family that has kids and, maybe stay-at-home moms or stay-at-home dads or whatever it may be. And I'm sure every family is faced with some type of debt. And some, might be minimal and some might be a little bit more substantial. But how could somebody work to get rid of their debt? Would they be able to do some type of financial plan for themselves to get rid of that debt?
Well, that's really what the next section of the financial pyramid is. It's almost those short-term goals, meaning I'm saving for an emergency fund, or I'm allocating money that's specifically going to go toward debt. So it's the short-term and the near-term money would be the middle section of that financial pyramid. And money that's really allocated in there is going to be very, very conservative. It's also going to be money that's probably going to be spent in a year or 2 years or, on an ongoing basis. And then as you move up the pyramid, so the very tippy top of it, the point at the top, that's the long term. So the beauty of the financial pyramid is that the base is the things that if the catastrophe happens, I'm covered. That's the insurance section that Ben was talking about. The middle part is the emergency money, the payoff debt money, the immediate cash flow, the short-term needs that you may have. And then the very top of it is the long-term. That's the college funding or the retirement or the vacation home or, something that is going to be many, many years down the road.
I want to make sure that we give our listeners your contact information, because if they're listening and driving and they may want to reach out, I want to make sure that they're able to get that information from you. So Ben, we have Ben and his direct number, 805-907-8587. And we have Melanie at 661-799-0230. If for some reason you didn't catch those numbers or that particular information, you can always get in touch with us. Come to my podcast, let me know, and we'll get those in touch with you. But this is all excellent information. And I've learned a lot of information too, because there's just so many different things that you can do, that you can invest in, minimal investments, or, paying off debt, or, preparing for a trip, or, preparing your kids for a college, or multiple kids for college for that matter. There's just so much to it that it really would help a family to sit down with you and figure that out. It's not something that they probably need to bring financials to you and bring some of their information to you so you can see the big picture.
Yeah, and everybody's situation is different. I think that's what we keep on going back to, which is good to know. Not everybody has the same plan. It's going to be a different plan for each individual, each family.
That's perfect. Well, you guys are listening to the At Home with Charlene show, live 2 to 3 on Thursdays at 98.1 on your hometown station. We're going to take a quick break. Don't go away. We have lots of great topics we're going to talk about, so stay with us.
Accidents happen, but rest assured Patterson's Collision Center is here to help. Patterson's is a family-owned and operated collision repair facility providing the Santa Clarita Valley with premium collision repairs. Patterson's prides itself on being the only California-certified green repair shop in all of Santa Clarita. They are insurance claim specialists and even offer payment plans for your deductible. For personalized, friendly service, visit pattersonscollisioncenter.com or call 294-1011 and let Patterson's Collision Center help ease your worries today.
The VIP Grotto experience at the Ivy Day Spa. Your experience begins with a clay facial mask. Then you are painted with a soothing aloe vera shea butter coconut oil body mask. In temperatured chambers, you relax and allow the moisturizing masks to work their magic. Finally, you rinse off in a rainforest shower and finish with a pH balancing mist. Treat yourself to this hydrating and refreshing experience at the Ivy Day Spa. Call to reserve your VIP Grotto experience at 260-1244.
You're listening to At Home with Charlene, with Santa Clarita's leading mortgage advisor, Charlene Gill of CSMC Mortgage. She'll be giving you the tools you need to upgrade your home or make it ready to sell, ready to refinance, or ready to purchase.
Thank you guys for joining us. We have a great show. We've been talking with Ben Hale and Melanie Meyer with Thrivent Financial. And so much great information we have for investing and preparing for your future, for your kids' future, for your retirement. And we've been talking about the short-term, mid-term, long-term goals. And I think we were just going to talk a little bit about the different individual investments you can do, such as stocks, mutual funds, bonds, exchange traded funds, closed-end funds, and preferred stocks. This is so much information that they're laughing at the background because they're probably thinking, oh boy.
Do we really want to go over every one of these? It's a long conversation.
we don't really want to dabble into it, but there's so many different ways to invest. And let's just say if somebody said, hey, Ben, Melanie, I want to sit down with you and I want to go over a financial plan. What would you say you would need somebody to bring to you, or what would be the basic start for somebody? Because we're talking to millennials and maybe moms and families, and what would you suggest?
Well, I think one of the concerns that people always have when they even approach us to say, I think I need help, is that we're going to have some preconceived ideas of what we're going to recommend, and that is not the case at all. My goal, Ben's goal, when we sit down with an individual is really to learn what it is that you are trying to accomplish, learn a little bit about what you've done already in the past, if anything, and get to know you, your family, what you care about, what you want to do, so that we can really tailor our recommendations to fit what your ultimate goals are.
So if somebody's coming in, you're going to want to know, do you currently have any money saved? Do you currently own a property? What does your debt look like? Things like that. So you can kind of gauge, okay, this is kind of where this person is. They're in the starting out phase, or these people are a little bit more established, and it gives you a broader idea of what to do. It's probably the more information we provide you, the better it would be.
Yes. Usually we have a checklist. We sit down with clients and say, this is the information we need. And it can be everywhere from, your mortgage statement, your 401k, your IRAs, your credit card information. So yes, depending on how advanced the planning is, the more information we might need. Everybody has a goal, but we got to figure out where we're at, right? So everybody says, hey, I got to get there, but we don't know how far you are away. Mm-hmm. So that's when we gather that information. It's a challenging exercise, but it's a good exercise because you have to rummage through the files, get all that information together. And usually Melanie and I have some pretty good real conversations. Why are you doing this? Why are you invested in this? Or explain your philosophy behind this insurance, or just getting to know what they were thinking.
And some people might not even have thought about investing.
Correct.
Maybe sometimes they're just thinking, I'm just trying to get by, or I'm just trying to make ends meet on a monthly basis, or I don't really have a lot of extra. But like you said, $100 can start something. Mm-hmm. It's the same way on our side. Most first-time home buyers don't think that they can buy because they have to have a huge down payment. Not true. So the more that they reach out, the more that they ask questions, the more that they consult with either one of you, they will be able to have a plan of some sort. Everyone's going to have a plan. Mm-hmm.
Correct.
Part of our job is helping people figure out the path that they're on. And so if we know what the goal is, we can easily say, based on what you've done in the past or maybe haven't done, you're on the path. You're headed the right direction, or maybe we need to make a little tweak and get you back on the right path. But it's all all about just getting to know what you've done, what your goals are, where you're headed. It's about getting to know you, the client, very closely, and helping design something that fits what you want.
I was going to say, imagine somebody in their 20s, right, who's thinking about investing. And if they just kept putting it off or didn't, oh, okay, I'll wait till I'm 30 or I'll wait till I'm 40. And then, maybe at that time I'll start, I'll have a better job and I'll be able to put more away. But think about what they would have done and how far they would have been if they started investing when they were 20, 21, 22 years old.
We would say Google what compound interest is. If you ask a young person what's compound interest, they might not know what you're talking about. But that little bit of money today, saved over a very long amount of time, becomes very powerful. So a young person should understand a little bit of savings today could make a huge impact in their future.
Right. Or if, let's just say you start saving at 20, what you would have saved in 10 years when you can't become 30. I mean, you might have a down payment. You might have a nice down payment for your first home.
Yep. And it doesn't have to be large amounts that you're saving on a monthly basis or annual basis. Small amounts can very much grow to big amounts over a period of time with compounded interest.
And I would say if somebody never invested in any type of financial savings, they're going to do themselves a disservice.
Correct. I think some people don't because they're overwhelmed. So they don't know what to do, which kind of gets to what do you invest in. As Melanie mentioned, a few of these very basic things that might be easy for them to learn. And it's really not overwhelming if they have somebody that can educate them on what they're doing.
I think maybe a fear somebody would have would be, okay, what if I invest this money and I lose it? Or, what if I invest this money and something happens? Then that particular person wouldn't have to invest in anything risky, maybe something, bonds or something that would be a little bit more long term. Now, what about investing for your kids? I know for my daughter, my mom had bought her a couple bonds when I was younger. My grandparents had bought bonds. So when I got older, I cashed those. And all the interest that was made on those bonds was a pretty decent amount of money by the time I was 18, 20 years old and I could cash it. Mm-hmm. What about something like that?
Well, I'm not here to recommend any particular investment. But there are certainly varieties. Those types of bonds are still available. Mm-hmm. It may be absolutely appropriate for some people, but there may be other options that people would choose instead of that as well. Again, it's going to be completely dependent on each individual's amount of risk that they're comfortable with, the amount of time that they have, a number of factors. So.
Yeah, because, those of us that have kids, we want to set aside and we want to make sure we have some type of investment for them or some type of money that they can rely on for school down the road or maybe help buy their first car or, whatever it may be. So, like you said, every family's might be a little bit different.
Yeah, and it's depending on the age. So we kind of went back to that time horizon we originally talked about in the earlier part of the show. If somebody is 4, your child is 4, and you're investing for them when they're 18, you don't have to, but you can take on more risk. You could be more aggressive with your investment because the market's going to be volatile, but over a longer period of time, historically, not guaranteed, historically, the market has increased. But if they're 16 and you're investing that money for them to take it out at 18, probably not going to make that same recommendation.
Right, because you're not going to have the length of time that's needed in order to make that grow or to have that advance the way it should.
Recoup it or make sure you have that liquidity you need. Correct.
Right. So what would happen if somebody didn't invest? I mean, they wouldn't really... Go ahead.
Well, it depends on if they didn't invest like for retirement or they didn't.
Yeah, I mean, what if there's a lot of self-employed people. Mm-hmm. There isn't a 401k. There isn't a retirement that's set up. At some point we're going to be at that age where, 60, 70 is not that far around the corner. And what if we don't invest now? What likelihood do we have for Social Security and other types of income at that point? We don't know. We might not have that benefit at that point.
Yeah. So there's a lot of tools for even self-employed folks that's where they should reach out to a professional and say, I'm self-employed, these are my goals, what tools are out there. Actually, self-employed sometimes have better tools because they have the ability to save for themselves. It's a lot of times the large companies with all the employees that are sometimes more difficult. So there is tools for individuals. There's individuals for individual families. There's tools for individual business owners, and there's also tools for large companies. I would highly recommend start at some point. It's never too late to start something, even if you're close to retirement. Melanie and I probably have experiences where we've met with folks that are closer to retirement. They've just had to put their foot on the gas pedal. They've had to go a little quicker. They've had to save a little bit more. But usually they're really motivated. If they know, hey, I got 10 years to try to make something up, they work pretty hard to get that savings
And
involved.
everybody who's listening that's a little bit away from the retirement age, this would be a great time to start thinking about retirement for you, your family, for your kids, because you don't want to get to that point in life where you're thinking, oh, shoot, I should have done this when I was thinking about it. You don't want to decide to do something and it be too late.
Yeah.
You know, you want to take advantage of doing it while you can.
Correct. And that also goes back to the pyramid. Everybody at a different age is at a different step of that pyramid. Melanie and I might meet with somebody that's young, and they're just checking the boxes at the bottom of that pyramid. Life insurance, pay down debt, and then you meet with somebody that's in their 50s or 60s or 70s, and they're near the top of the pyramid. So the conversation is completely different.
You guys are listening to the At Home with Charlene show on KHTS 98.1 live from 2 to 3 on Thursdays. And we're here with Ben and Melanie with Thrivent Financial. And one other thing that I think we were going to talk a little bit more about was the term life insurance or the life insurance in general.
Sure.
For families or individuals or like I was saying, there's insurance I think that you could put away for maybe the kids. How do you, or what information do you have to share on that?
Well, actually, really good questions, because I always feel like life insurance is a difficult subject for people to understand. Difficult in that they don't really understand the differences between two different types of insurance. People also don't understand how much they need or how much they don't need. So it's just a vague conversation that people need an education on. So let's start very basic. How about?
Sure. Basic's good, because all of us listening, including myself, we want basic information that we could start with.
This is always the starting point. So think of life insurance of being two different generic types. One is going to be called term insurance, and the other one's going to be called permanent insurance. Now, term insurance is usually the most affordable. You can usually get the highest death benefit for the smallest amount of premium. And a term insurance is set up for a specific term of time. So you could often get a 10-year term or a 20-year term, a 30-year term. But that is decided ahead of time. So when you're applying for a term insurance contract, you will say, I want a 10-year contract or a 30-year contract. And then you will also choose a death benefit that you receive, but that death benefit is going to be fairly high in proportion to the premium that you're going to pay. Term insurance is specifically set up most often for a specific need. So you are in the mortgage industry.
Right.
Many times people will say, well, I want a 30-year term insurance contract because that's what my mortgage is. I have a 30-year mortgage. And if something happens to me before my mortgage is paid off, I want this term insurance policy to pay off my mortgage for me. So that's a very basic example. Sometimes people will say, my child is going to college. I need a 10-year term or a 5-year term contract. Maybe it's 10-year term before all of my kids are out of college. And so if something happens to me, this life insurance policy will pay the tuition for my kids to go to college then.
Now, I have a question for you. For term life insurance or any type of life insurance, it's my understanding that you go through a pretty regiment health screening to make sure there's not a lot of pre-existing conditions and things like that. Is that true?
Well, there will most often be some medical questions. So just as an example, if you were just recently diagnosed with something terminal, you're probably not going to get life insurance coverage. But there is a a ratings system with every insurance company that says, are you just as healthy as everybody else in the United States, or are you a little healthier, or are you a little less healthy? And those medical questions are going to determine where your premium actually ends up being. You could get a discount if you happen to be slightly healthier than the general population, or your premium might be a little bit higher if you've got some medical history that the general population doesn't necessarily have. So you're right, there are a bunch of medical questions and medical history that you will go through, but it's going to be happening with any insurance company that you're looking at.
And what's the difference between the term life and the permanent life?
So permanent insurance is, think of what that term is. It's permanent. It is set up for a long-term need that most likely won't go away. So very different than the college example or the mortgage example that I used. Quite often, permanent insurance is used when there's an income stream that needs to be replaced. So as an example, if I'm working and my mortgage is paid off at my death, but my income that I have earned is still needed for my survivors, a permanent insurance policy would continue to pay an income stream. It would make up my income stream. Now that income stream, just because I'm working, it's needed obviously at that time, but that income stream may also be needed for my spouse or my family during their retirement years. So it's a much longer time frame, which means it's much more of a permanent need instead of just a term.
And that probably has a little bit more of an increased premium than your term
Yes.
life insurance, I would assume.
Yes. So permanent insurance is going to have a higher premium based on the proportion of the death benefit that you have. And again, that premium is going to be based on your health. So it's a variety of different amounts for each person.
Now, what about putting away for your children? What is that called? What is that part of the life insurance?
That's the unique part about permanent life insurance, is that there's an element to a permanent insurance contract that has a cash value. So it's kind of like you're building a little bit of equity in your home. You're building some equity in the life insurance policy. And many times people will use that cash value that accumulates to be accessed for college funding, or you can use it for income at some point in retirement, or emergency funds, a variety of things. But it kind of fills in that middle section of the pyramid almost. So that if a permanent life policy would check off the bottom part of the financial pyramid, but it is also going to check off some of the middle part of that pyramid as well. Ben, do you want to
No, I just
elaborate?
I just like the fact that there's the cash value portion. A lot of people, when you're making a premium payment, a portion of that premium every month or every quarter, however you pay your premiums, a portion goes towards the life insurance, which is the cost of the life insurance, and a portion goes into a some type of savings account. And depending on the type of permanent policy, and there's different types, is how that cash value earns its interest. And there's different types out there that folks would need to learn about. So you kind of get to accomplish a couple goals at the same time. And it's the life insurance planning is just like investment planning or just like college planning. It's I believe that the proper amount of life insurance and the type of life insurance is what is budgetable and accomplishes the goal, right? So it's not, oh, you need to buy permanent or you need to buy term insurance. It's, well, what are we trying to accomplish? If mom or dad doesn't come home tonight, we need to replace an income of $80,000 a year for 30 years. That conversation might be different than the conversation you have with, I'm 62 and I only have 5 more years until I retire and all my kids are grown and I want my life insurance to be for my church. It's going to be a completely different conversation.
Yeah, just as if I had a first-time home buyer versus somebody who's owned 3 or 4 properties and, they're looking to maybe buy an investment or, a vacation home or somewhere down the road. It's going to be 2 completely different conversations.
Absolutely.
The first-time home buyer is, let's get your feet into a property. Let's let you build some equity. Let's let you stay here for a few years. We'll rent this property out, and you're going to move on to a new investment. Versus somebody who's owned multiple properties who's going to come in and say, I just want to maybe, little loan on this one, and I want to maybe retire, Big Bear, or whatever it may be. So everything's going to be a little bit different.
Yeah, I think we speak the same language, but in different categories, which is kind of neat to know.
Right. So, I mean, because if somebody comes up to you and says, well, what stock do I buy? Or, what particular thing would I do? And you said, well, there's a little bit more involved. There's a little bit more that we need to do. We need to really look at your overall goal and your planning and your, so if you were to, let's just say I called and said, I'm thinking about, coming to meet with you and we need to talk about a few things. What would typically your checklist look like?
It would be things like your mortgage statement, any kind of savings that you currently have, IRAs, 401ks. A lot of times will tell a client, whatever you think you have questions on financially, bring it. We might not need it, but go ahead and bring it, so then we can go through it, and we'll just, we don't need to talk about this, dismiss it, but this is important.
So like when we go to do our taxes and we're thinking, can we write this off? And you
Same
make that big itemized list of all your things and you're thinking, okay, that's what I did. I had a 3-page list of everything itemized, everything was broken down. And she's like, well, Charlene, we can't write off your daughter's dance costumes. And I thought, well, I put them on there because just in case.
Yeah.
You never know.
Yes. We have some folks that walk in with a giant stack of paperwork and others that bring us 2 pieces. And we got to start somewhere.
Yeah, but then the 2-piecer gets the checklist and then they bring the rest of their paperwork in and then they figure out what they need to do.
You got it.
So, well, you guys have been listening to the At Home with Charlene show. I've got Ben and Melanie here with Thrivent Financial. We're going to take a quick break. We're going to wrap up our show, give you a little bit of information on how to contact them again, and we'll see you in just a few.
Santa Clarita Philharmonic has begun its season of free concerts. The SCP is a non-profit community-based volunteer symphony orchestra comprised of local musicians from throughout the Santa Clarita Valley who are dedicated to providing quality classical music for the residents of the Santa Clarita Valley. Like the Santa Clarita Philharmonic on Facebook or visit santaclaritaphilharmonic.org for more information.
Fruit arranged like flowers? What a delicious idea! Edible Arrangements specializes in creating a variety of fresh fruit arrangements overflowing with fresh, hand-designed fruit and filled with strawberries, pineapple, grapes, cantaloupe, honeydew, and seasonal favorites. Made to order in a size you select and ready to eat and enjoy. You can even add chocolate to any arrangement. Edible Arrangements is always fresh, always appropriate, and always appreciated. Order yours today, 253-0052 or ediblearrangements.com. Edible Arrangements is on Soledad near Bouquet Canyon.
There's only one Santa Clarita plastic surgeon who is Yale trained and board certified, Dr. Justin Heller.
To be a board certified plastic surgeon like myself, what that truly entails is about 5 to 7 years of honed surgical training in reconstructive, all areas, as well as aesthetic, so which means your facelifts, your breast augmentations, your body contouring, true training, and board certification. In fact, that's the only board certified area that can be achieved in this realm.
Dr. Justin Heller, warm, understanding, always available for guidance because he's local. HellerPlasticSurgery.com.
Giddy up! Time to dust off your boots and throw on your cowboy hat. The 25th Annual Santa Clarita Cowboy Festival, presented by Heritage Sierra Medical Group, is coming to Old Town New Hall April 19th through 22nd. Set at the historic William S. Hart Park, the Cowboy Festival will feature live performances, authentic cowboy gear, and mouth-watering peach cobbler. General admission is free, and there will be ticketed performances in Newhall from Honey County, Hot Club of Cowtown, and more. For more information, visit cowboyfestival.org.
Welcome back, you guys, to the At Home with Charlene show, Thursdays 2 to 3 on 98.1. And I'm sitting here with Ben and Melanie with Thrivent Financial, and we were just on break discussing how truly the financial side with them goes hand in hand with the mortgage financial side with me. And because on my side, I'm pre-approving a client, I'm looking at all their financial documents, I'm planning their mortgage side, and Melanie and Ben are actually planning for the future investment side. So really the two go hand in hand quite well.
They match up really well. In fact, some would say if you're planning on buying a home or you're buying a home, that would be a time you would look at your financial life. And if you've gathered all the documents for Charlene, you might as well walk them into your advisor and say, we should start planning for other things.
I definitely think that should be a good thing. Now you just made the biggest purchase you're probably ever going to make, which is your mortgage. I don't know if there's another bigger investment that anyone's going to make besides that. And if you do have your mortgage and your family and whatnot, you should make sure that your finances are going to be on point as well, to protect your investment, to protect and build future wealth for yourself, because that's going to be a huge play in, building your wealth, because that's what we're all doing, right? We're building our wealth for our family. We're not building our wealth for ourselves. We're building wealth so that when we move on and we pass on, we have a legacy that we're handing down to our kids, and that they can in turn hopefully manage well with and hand on down, because really it's tough. It's tough to save and invest and be smart about all of that.
Yeah. And if you're buying that largest purchase of your life, the home, you're going to want to review your life insurance needs. You might have a bigger mortgage. You might want to review if you're still going to meet your goals, if you need to adjust it. And those are all things you probably need to talk to a financial advisor on.
I would definitely suggest that. I gave out Melanie and Ben's numbers earlier. Thrivent Financial, you can reach Ben 805-907-8587 or Melanie at 661-799-0230. Such nice people, great advice, both have so much experience in this business and can definitely help put a path together for all of us, actually, and put us in a right position in our lives. We've seen the mortgage interest rates are probably still around the mid-high fours in most cases. That's kind of where we're seeing the trend going to be going into the year. If you're thinking about purchasing, definitely make those purchases. Refinancing, make sure that you're putting your refinances in place. Get all that done. We're estimating possibly another 2 interest rate hikes this year. Fed's discussing increasing another 2 times towards the end of the year. So don't be caught off base. Make sure that you're looking into those. If you're on the fence about purchasing or on the fence about refinancing, don't wait. Make sure you get on the ball and get those things rolling, because you don't want to miss out on opportunity or miss out and now you're out of the market, or maybe the home that you were thinking about is $25,000 more now, because of the lack of inventory and the investments are moving fast once they hit the market. I wanted Melanie to share too, because she's got a couple of educational seminars and things that they're doing that are coming up. So if anybody is interested in attending, meeting her, getting more information, Melanie, where are you guys going to be at?
We are going to be at the Double Trouble Wine Room right down the street on Main Street, Newhall. And it's an exciting little series of presentations that we're going to be putting together. It's about creating a space primarily being marketed for women and finances. Women are often the ones that don't necessarily have the conversation with our friends about what's going on in their finances. Men many times do. They'll talk about it at the water cooler or at the soccer field or wherever. But that's not a conversation that women normally have with each other. Yet we're also the ones that need to have those conversations and understand what's going on in their financial life. So this event that we're going to do quarterly at the Double Trouble Wine Room is really a place where we want to create a comfortable atmosphere so women can ask questions, learn about their finances, drink some good wine, have some good food, and great conversation just about money.
Do you have a date or time set for your first one?
The next one is June 14th, so it's a Thursday. I believe we're going to start about 5:30 and go till 7:30. There's always a presentation that we'll be doing, but there will be time for questions and just conversation amongst whatever women decide to show up. And I don't want to mean that it's only for women. We did have men show up last time too. The financial concepts are generic. They're across the board. But this is really designed for a group of women to get together and feel
So
comfortable.
just to make sure everyone that's listening heard, you're at the Double Trouble Wine Room.
Yep.
Right here on Old Town Newhall.
Yes.
They're going to do this quarterly. Their next event is going to be June 14th, which is Thursday, and she's thinking time frame is going to be about 5:30 to 7:30.
Exactly.
Do you post anything anywhere on these?
Yeah, we'll have some posts on Facebook. We'll probably run some ads in various places. I don't have all those logistics figured out completely right now, but we will be making sure that it gets out to the community and as many people can attend as possible.
Perfect. I think the major, what we really wanted to touch upon on this show was that your future investments are really important, whether that be mortgage and whether that be your personal finances, because we have a legacy that we're setting for our families. We have the responsibility to provide that for our kids and for future generations to come. And if we aren't being cautious and we're not putting that effort out ourselves, we're doing a disservice to them. We truly are, because if we can finance and we can manage correctly, we can put more kids into school. We could take more kids into a college situation if we just had a little bit more information and we knew a little bit more of ability of what our options are. And I think that's a big part of our show, is to really let people know that there's a lot of options. And there's a lot of options with mortgage. There's a lot of options with finance. There's a lot of options for everybody. And to not think that you're in a situation where you can't do it, or you can't save, or you can't provide for your family, because everybody can. Everybody's situation might be a little bit different. Everybody's planning might be a little bit different. But there's a great team here who would love to be able to put ourselves out there and help you. I want to just make sure everyone has my contact information with CSMC Mortgage as well. My direct number, 805-304-6004. And all three of us would love to help. All three of us would love to help your family get into a situation that you find would be beneficial for you. And I know that's been in Melanie's goals too. And, with families and children and whatnot in your family, that's the same goal.
And working with Charlene is important, because real estate is a good part of your well-diversified portfolio, right, Charlene?
I think it is. And you know what? And I tend to be very conservative, because 4%, mid-4 interest rates are phenomenal. I mean, my first house I bought was 6.25. My mom's house when she bought was 12%. So take advantage of the lower interest rates and secure that over a 30-year period of time, and know that that is your payment for the next 30 years, so that you can go into the financial side and be ready to go, and you're not in an adjustable. You're not wondering where your payment's going to be in 5 years. Is it going to adjust? Are we going to be in a problem? Will we have a situation at that time? Be smart about some of the decisions, that are made. And I don't know. Do you guys have anything else you'd like to add with that?
No, I agree with all the things you've said. I think there are many, many things that each person can do to just set their financial lives up so that they reach whatever that successful goal is down the road. And this program, the workshops that we're doing, are just part of the process in helping people get there.
And the last thing I would say is thanks for having us on. We really appreciate it.
We love having you. It's been a pleasure to have you guys, and I hope everybody enjoyed our show. Think about your future. Think about your wealth. Make sure you create your legacy for you and for your family. Thanks for joining us, and we'll see you next Thursday.